Thanks for tuning into Stocks with Antonio. I wanted to jump on here Sunday, make a video about a company that's coming out that I know a lot of people are going to be interested in, and it's Netflix. July 16th, Q2 earnings are coming out. And that's going to be an important date to be watching, especially if you already have Netflix in your portfolio or you're considering investing in it. So don't forget that date, write it down on your calendar because that's going to give you some insight on the company, which is going to be important. I'm going to be going over some of what happened on Q2's earnings. We'll see what happens on Q2, but I'm going to be going a little bit over Q1. Also, some of you that don't have Netflix in your portfolio, you might be wondering, hey, when's the bottom? When's the best time to get in, right? A lot of people want to know when's the best time to get into a company. And I understand who wouldn't want to know that, right? I want to know that myself. In my opinion, a good idea is if you have TradingView, I like to go on TradingView. And when I'm looking to start a position in a company, I like to use the 200 EMA and I'll go back on it. I'll go on the weekly time frame. I'll do the 200 EMA. I'll go back and I'll see if it's gone under it, bounced off of it, things like that. Just look kind of at the history. And sometimes you'll see that there's certain companies that's in the past, it showed a good area of entries around the 200 EMA. Sometimes it goes under it. So when it comes to Netflix, Netflix actually went under the 200 EMA in 2022, but eventually it recuperated. So in my opinion, if it's around the 200 EMA or under it, it's not a bad idea to start position size if you plan to hold the company long term. Netflix is around the 200, at least on the weekly time frame, and I don't think that's a bad area to start position size. So some of you may be anxious, say, hey, I want to get into Netflix. I want to get in before earnings in case earnings come out really good and the stock makes a move. If you want to take some of that risk and you got a long-term outlook, then you might want to get in before earnings. If you're like, hey, I kind of want to see what happens after earnings because the stock may sell off, which it could. It did on last earnings, and then you can even get a better entry. But timing the bottom is, in my opinion, impossible. So the best thing is just look and it. So what I do is I go in TradingView. I look in an area where I think it's not a bad area. So I just mentioned it with Netflix. I think around the 200 or under it, not a bad area to start position size, and then be patient with it if it's a long-term investment. If it's a short-term investment, I probably would hold off if you're just looking to get in and out till I see more insight in the company. So after Q2. Now I'm going to go a little bit over what happened on Q1 because a lot of times companies will come out with great earnings, good earnings, they beat expectations, and a lot of people are like, why did it sell off? Like they're so surprised by it. And in my opinion, the best thing to do is do research why the company sold off, right? There's usually a reason behind it, and a lot of times is the forward guidance. Investors are not so concerned with what it did in the past. They are, but what they're more focused about is in the future. And also remember, there's people already invested in these companies before you. So if you're invested, for example, in Netflix and you invested a long time ago and you're up on it, you got good profits, and the earnings are coming out and you don't see good guidance for management. You see the numbers going down, you see concern, and you're like, wow, I'm up quite a bit. I'm going to go ahead, take my profit, nothing wrong with that. And you might put it into a new opportunity because your goal is to do what? Increase your wealth, increase your money. So you may say, hey, I don't feel comfortable with my current position. I might keep some exposure in the company, but I might take some of my money and put it somewhere else. So these things happen because a lot of times when you're watching these companies on YouTube, on Instagram, wherever you're finding out about them, the reason people are talking about because they're so popular, right? After Netflix split, every YouTuber was talking about it, right? So a lot of people were hyping it up, but what a lot of people forget about it, who's really benefiting off these companies? The people that have found opportunity in them a long time ago before they were being hyped up, right? When they already make their huge run and everyone's talking about it and saying how much has gone up, the person that's making all the money is the one that found those opportunities early on and invested in it. When it makes those massive runs, and everyone's talking about it, a lot of times you missed your opportunity. It could continue moving up, but it might have already made its run. So keep that in mind too. But let's get back to their last earnings. So last earnings, Netflix sold off sharply after the most recent earnings reported. Even though the headline numbers were strong, the market focused on the outlook rather than the backward looking results. So investors, and that makes sense because if you're investing in a company and it's doing good, that's important. But if the forward guidance on the company isn't as strong anymore or showing concern or weakness, are you really going to take your hard earned money and put it into a company that's showing that they're not going to grow as much anymore? They're showing weakness, things like that? Probably not, right? Because you want to put your money into a company that is performing well, but is showing potential to continue to grow. The management is telling you that they believe they're going to continue to grow, their numbers are going to continue to grow, and then you're going to have confidence putting your money into that. But if that forward guidance isn't there, then there's going to be concern and you may not want to take risk on that company. So that to me makes perfect sense. So that's just something to keep out, be on the lookout for Q2. If there is a sell-off and they for some reason did beat and they sell off, go find out why before investing into it because there's probably going to be a reason. What happened? So what happened that they sold off? Revenue beat Wall Street expectations. EPS beat estimates, although part of the profit came from a one-time breakup fee, making the earnings quality look less impressive. So they got a big lump sum, I believe, when they're trying to buy, I believe it was Warner Brothers. The deal didn't go through, but because it didn't go through, they got like a few $1 billion. But that was a one-time thing, right? So yes, your numbers are going to look good for last quarter because of that, but how are you going to make up for that on their next or on this next earnings that's coming up? So that's something to find. We're going to want to see what what management says about that. Management maintained full year guidance instead of raising it despite the strong quarter. Investors didn't like that. So management maintained its 4 year guidance, but investors wanted more. They wanted to see it an increase, not to maintain. So Q2 guidance came in softer than investors expected, which became the main concern. So that's why you see the company sold off. Some people decided to take profit. They saw some concerns. Stocks reaction: shares fall about 9% in after hours trading immediately following the earnings release. The decline continued the next day, with the stock briefly down around 10 to 12% intraday before recovering some of the loss. Why investors sold? The market had priced in a very strong report after a significant run up. So the shares ran up before earnings, then earnings came. Inspectors didn't get what they expected, what they wanted, so it sold off. Investors were expecting higher forward guidance, not just a beat. The earnings beat was boosted by a non-reoccurring gain, so that's concerning because how they're going to make up for that. So the underlying business wasn't quite as strong as the headline EPS suggested. The company's forward outlook suggested slower near-term growth than the market wanted. So I wanted to go a little bit over their last earnings so you could see some of the areas of concerns, why the stock sold off. Now, you can see the stock's trading well under $100 right now. And a lot of people think that we're near the bottom and that's going to start to go to the upside. My opinion, for that to happen, we're going to need those Q2 earnings to come out to see if there is a possibility of it is going to start to recover back to that $100 range, or if it's going to fall, if the share price is going to fall down even more. It could go under $70, right? We're going to have to stay tuned to July 16th. I know some of you bought Netflix and you bought it after the split. You may be upside down on it and you're wondering, hey, what do I do? Do I cut it? You're going to have to make that decision. If you're wondering, I do have Netflix in my portfolio. I think it is a long term, it is a great asset to have. And I believe on these pullbacks are going to be opportunities to grow your position size. So sometimes what you do when a company's getting beaten up, when a company share price is going down, if you see potential, you believe that company is going to come through at the end and 10 years is going to be a lot higher from today's price, then when you use this opportunity on these pullbacks, it's going to be building up your position size. And when it does start to recover, right, your portfolio really will grow with it. But there's no guarantees of that. Investing does carry risk. So it's important always to be managing your portfolio. If you're doing short term, make sure you're having a stop loss. And even in your long term portfolio, you want to be watching it. Sometimes the company may not be performing as one expected anymore. Things may change, and you might want to take that money and put it into something else. So it's always good to stay on top of your portfolio. I wanted to go over a little bit on their last earnings, Netflix. Keep on the date, July 16th, and we'll have to see what Q2 earnings comes out with to get a better idea what the price is going to do long term. That's my views on Netflix right now. I do have it in my portfolio. I think it is a great asset. I do see it as a buying opportunity, but Q2 is going to give us some more insight. Let me know what you think down in the comments below. If you haven't done so, please do me a big favor. Smash the like button, subscribe to the channel. Also, if you're thinking about joining a community of like-minded people that are looking for opportunities of growing their money, looking to build wealth, then you might want to stay tuned because I am going to be doing a Discord. It's going to be an opportunity where we can get together, talk, go over things, and that's going to be coming out soon. So if you're interested, keep on the lookout for that link. Don't forget to subscribe, and thank you again for watching, and I'll see you on the next one.